Morning, everybody. So we're going to have a look. Well, I say morning. I suppose it is still morning. Right. So let's get started with a bit of an overview of what's going to happen, in my opinion, and based on the model that we've got here for next year for Bitcoin. So I'm on my old laptop here, and with that comes some old analysis, if you want to call it that. These white lines represent halvings, basically. One halving, continuation up, bear market. One halving, continuation up, bear market. One halving, continuation up, bear market. One halving, continuation up. So we're kind of looking for the pullback, the bear market to happen maybe sometime towards the middle, towards the end of next year, which I would say safely puts Bitcoin at a very good situation, really, when it comes to time. Now, I know everyone's likes to sort of deviate from the model, but I don't really see the point of that when you have a model that fits and it's so far unbroken. So it's tempting to always say or go along with this time is different, this time is, but I mean, as far as I'm concerned, this time is not different. This time is exactly the same, which is, how I've managed to sort of get these big swings, from the previous sort of alt season, of last year to the bear market of this year to the breakout towards the end of this year, even to the pullback of December, right? So a lot of it has so much rhythm that to these charts on the high term time frames, and this is a monthly we're looking at. That I really don't see any reason to deviate from the model. Now, I'll only be wrong when the model breaks, and if and when that happens, obviously I'll be caught short because I'm putting a lot of weight on the model. But why wouldn't you when the model seems to fit? So again, this is all analysis really is, looking at rhythms, patterns, statistical likelihoods of success or failure. And I strongly believe in what I've said this whole time, that we're going to perhaps maybe even break out towards the end of this year, literally the last few days into the beginning of next year. But generally, I would expect January to give us new highs, for Bitcoin and for altcoins. And I think the stock market would also recover throughout that period, because I don't know if you've looked, but the S&P stocks, they've basically been going up and down and side to side in the same way that Bitcoin has been doing. So all markets are tied very much together. I don't really see a problem. So this there again is just a bit of an overlay. I just thought I'd point it out to you. We're kind of looking for an end of this, just like I've been saying, roughly sort of towards the end of the summer of next year. So we've still got a fair bit of time left for new highs to be generated. Right, so let's turn the log scale off. Let's go to the regular chart. Let's take ourselves to a weekly, and then we'll put all the noise on, and then we'll refresh the chart. Running dialogue of the day. Right, so what we're seeing is we've lost the 7 simple moving average at this point now. We're closing down with another red week, so this isn't the worst thing you've ever seen in the world, but there's so much support below us on the weekly that it's up to you on your risk tolerance. Now, me at this point now, on that last dip that took place, I filled about 60% of my cash. It's now turned to crypto, basically, in that big drop that happened. Like, most of my orders were filled, Don't like being more than 70% exposed, so some weren't. Still looking for a little lower on Ethereum, for instance, or I was hoping for lower. If I get it, great. If I don't, no big deal. And the idea is, we drop and then sort of more or less V-shaped recover over the next couple of months. And probably see another pullback at that point then until we see how high we're going to go. It's difficult to say how deep it will be, but probably another pullback similar to what we've seen throughout December, maybe February, March, I reckon. But again, these are all looking way ahead. You've got to take things step by step, day by day. So since we've lost this area, the next major area on the weekly is going to be a 10 exponential. It's not a great moving average on a weekly, not normally. You're up and down through it, not really using it that much, but it does exist and it is there. And the price of that currently, 90,000. 600. Then below that, all you've got left is your 21 exponential, which is down here towards the lower 80s, really around 81. So, this is going to be trending up. All these moving averages are trending up because it's an uptrend. So, with every week that closes, the supports will get higher because it's an uptrend. We do have a lot of bearish divergence, though, on the RSI, and we've had this for a little while. We have sort of lost, I suppose, the momentum that we had way back. But that doesn't really mean too much at this stage, other than it is a red flag. But we're still in a significant uptrend, so dips are still for buying. But the next significant dip could take you down to the low 80s based on the weekly. So recognize that for what it's worth. And that's what the weekly chart says. It's not. I'm not saying that we're going to come down to the low 80s. I'm saying that if we did, it would still offer an epic opportunity, nothing more than an epic opportunity. I personally think that we're more likely to sort of resolve this to the upside relatively soon. The daily is the same as it's been for a week now. So the big dip took us down to the 50 simple and exponential, where we had that nice bounce into the Bollinger Band Center, so your 21 moving average, where we got rejected from. So standard stuff. Bounce from a golden cross, rejected from the 200, from the 20 moving average. You're basically stuck in this range now. Now, the Bollinger Band would say you're 65% more likely to remain below this portion of the band. So this means that the resistance for Bitcoin, particularly, is almost exactly 99,000 at this stage. So 99,000, big resistance, offering nothing more than rejection. 50 exponential, epic support, as you've seen. So bounce here, another bounce here, bang, bounce here yesterday, and today we're sort of like messing around down those areas. So this is our range, and the resistance is declining in its price because we're below it. So we're having a subtle uptrend on the 50 exponential, a subtle downtrend on the 20, which kind of makes a symmetrical triangle of sorts. So it's a breakout trade, really, one way or another. If we lose, for safety, we'll call it 92,500. If you start closing candles below there on a daily, then you're very likely to come down to the next major levels. We've already established that 81,000 is a big support on a weekly. On the daily, 75,700 is also a massive area to get supported from. And again, I'm not calling for these to get hit. I'm pointing them out. So I think this is a lot. Yeah, this is me going to start moaning again now. But I think this is the thing that a lot of people don't quite get, really. Yeah, nobody knows. Nobody actually knows. But you do have ideas, right? And then you've got to plan for what happens if this happens or if this happens. If it goes up, great. Like I said, 60% in already. If it goes down, no big deal. 40% left to go. If I have to. And the weekly center of the Bollinger Band, again, 65% more likely to remain above this area, is 76,500, which isn't too far off that 200 exponential on the daily, was it really? You kind of looking at these areas, there's rhythm to it. So we've got a lot of support currently below us right now, more or less where we are at this very moment in time. And if we bounce from there, I wouldn't be at all surprised. In fact, I'm kind of counting on it. But if we do lose those areas, oh dear, down to the mid 70s, yeah, is probably the lowest you'd expect to see it go. And if it breaks down below there, we are in the middle of a bear market, and it's probably time to reassess any kind of model at that point. Which is what, like I say, it's always worth thinking about. The current model, does it still fit? Yes, it does. So is it still bullish? Absolutely, it is definitely still bullish. What's the criteria for suggesting bear market? Well, it would be closures below these major supports on the weekly and the daily, which still present as an uptrend. Statistically, they are more likely to bounce and recover from those areas than break down. We're also, more or less there now. We've seen the response to this, but this is a symmetrical triangle formation. And like I said, if you're going to break out, you're bullish. Break out above 99,000, closures on a daily above that level, you're bullish. Closures below 92,000, you're bearish until further notice. So that is basically the deal. So I mean, I've not been around for the last couple of days. I don't really see that there's a great deal of need for it, really. The markets that I've explained and sort of given my sort of 2 pennies worth, over the last year, have mostly been on these giant swing trades. Whether it's that alt season that we saw last year, in October, a few 100%, great. The bear market that we saw throughout this year, so exited positions, in anticipation for that, lovely. Picked them back up again towards the end of this summer, effectively scraping the lows. Lovely. Exited them November, so we saw that it was overheated. Preserved capital. Entered back in on this dip. Okay, lovely. It's a fire sale, 50% off from the highs, the most recent local highs. Lovely. So now I'm looking to see this recover over the next, we'll call it 4 to 6 weeks, really. to find a new local high, and then probably think about selling some again and letting it all come down to whatever level for whatever duration of time. I don't know how long it'll take because I don't know what it's going to look like when we get there, but that's the general vibe. It's not any different to what I've been saying literally for over a 12-month period. It's the same analysis. Again, making videos on a daily basis is fun for some, but the overall analysis remains exactly the same. So long story short, whatever we do, if we go down a little further, and again, it's not a little further, it's quite a lot further, it'll be painful, but it's opportunistic. If we go up, excellent. That's my preferred choice, not because I want that, but because I think that's the most likely scenario. And great, I'm in. So I don't really know how else to put it. It's the same thing I've been saying this entire time. I'm not afraid of this market. The only sort of problem, I suppose, if you want to call it a problem at all, is stocks and how stocks are going to behave. Because if stocks decide that they need to come down further, then Bitcoin will come down a lot further. Altcoins will get absolutely wrecked, citied. But that's the risk you play. This is why it's a high risk. It's a high risk market, even when you're dealing with Bitcoin. We've not really seen Bitcoin do anything particularly devastating. But if it were to come down between that 50 exponential and the 200, it's a 19% drop for Bitcoin. So you could deduce, I like that word, you could deduce that actually altcoins will come down a hell of a lot more. Another 50, another 60%, another 70%. Who knows? They could. But for the moment, odds are in favor of a bounce and a V-shaped recovery from here for Bitcoin and for altcoins. It's just the stock market that we're a little unsure of, really, and that's the chart that would run behind this that would add more weight to this either breaking out or breaking down. And obviously behind that is the Dixie, but those videos will be for when I get home, using a real computer rather than this thing that's on my lap right now, which I've got a love-hate relationship with it, but it serves a purpose to get some information out there for you, give you my thoughts, but it can't be pleasant listening to this rattling on. Right, so I'll leave it there. So long story short, still looking for the V-shape, still looking for the breakout. I don't think it's going to happen today. I don't think it's going to happen tomorrow, but we're getting very close to what I expect, which would be beginning of next year. So maybe as soon as it could be as soon as within the next week. So this next week that comes, I would expect to see the V-shape beginning really to pick up at that stage. So early on in January and then throughout January. That's my expectation. But it could happen any minute. I mean, this is a support worth considering. If you didn't sort of buy this dip, for instance, or this dip, I mean, we've come quite close to it again. Or you could just wait for the breakout or the breakdown. A more conservative trader would do that. We've broken down, we've closed down, so we should now expect lower. Okay, we've broken out, we've closed above, we should now expect higher. Trying to trade within the formation, because it is a formation, adds more risk, obviously, because smaller moves. It's a sideways, up and down, shaky market, scalping market, really, if anything. But small trades really, because there's only so much you can expect. If you bought this to sell here, it's not an enormous trade. But a breakout from here up here, a much bigger trade. A short from here to here, much bigger trade. A long or a bounce from here to obviously much bigger. These are all appropriate ways to think from a trader's perspective, because they're all as likely as each other at this stage. So someone out there is going to give you an absolute, I know what's going to happen. But the best thing to do is to think any of these situations could happen. Allow myself to prepare for each one of those, so there's always an opportunity presenting itself, whether it's up, down, or sideways. Right? That's how you really make money. That's how to make money out of the market, regardless of what it's going to do. But personally, you know me. I've told you I've sort of went crazy. All a lot of my orders have already been filled, and they're all altcoins. So I'm quite a conservative trader. I don't like making mistakes. So, or no one likes making mistakes. But for me to let that happen to me, to fill all those orders, should tell you something about how confident I am about how this is going to play out. But confidence is one thing. Price action is another, and we'll only really know in about 4 to 6 weeks if I was actually correct. Right. So I'll leave it with you there. Hope you've had a nice Christmas. and maybe I'll make another video tomorrow if I get a chance. Thanks for watching. Take it easy.